Posting their worst day in more than 5 years. The NASDAQ closing 6% lower today. Joining us now, Dan Ives, Wedbush Securities Global Head of Technology Research. Dan, it looked pretty ugly out there today. You're usually bullish on the potential for technology, but this picture is complicated, not just by the dollar impact of the tariffs, but by what happens to brand America around the globe, where even this software has to be sold, no?
Yeah, I mean, look, it's essentially an economic Armageddon. You know, if these tariffs stayed in place, and the reality is talking in front of a microphone in the 202 area code is a lot different than the reality of moving the supply chain. And I think it speaks to our point that when you look at China-exposed names, from NVIDIA to Apple to any of the semi names, I mean, this is as nervous as I've seen investors going back to, COVID, March 2020.
So what do investors need to listen for on these earnings calls? What are the fundamental numbers to watch, perhaps when it comes to margins getting squeezed, to understand what the real dynamics are going to be throughout the rest of 25 and where you can continue to get a valuation premium?
So I think there's three things I think you have to look at. One, I mean, Navarro talked on negotiations. You have to assume that these tariffs don't hold in their current form. If they hold in their current form, then essentially you have 15 to 20% demand destruction across the board in terms of costs that are actually going to have to come through. And to that point, I don't think a lot of companies even give guidance on their 1Q conference calls, given what we've seen in terms of the head-scratching tariffs. The thing that you really have to focus on in terms of like what demand destruction looks like in terms of when it comes to AI revolution, data center build out, inventory, and then of course you start looking at consumer focus, names like Apple in terms of what that means for iPhones. The reality is if you want an iPhone made in the US and you want that for $3,500, we should make it in the US. If you want it for $1,000, you keep it in China. So I think these are all the issues that investors are trying to sort of game out.
So in light of that, I'll just use Apple as an example. There's just this automatic assumption that any kind of price increase tied to 54% tariffs on goods imported that have been made in China, iPhones perhaps included in that, is going to be pushed out to consumers. Is that actually going to be the case, especially if you look at an Apple that has pretty robust margins and maybe is going to absorb some of that cost? Yeah, Mark, if it was a smaller tariff, that's something that maybe that they can absorb. But these are numbers, I mean, that I view as absurd, and I think many view it across tech. So there's only whoever's going to pay it, it's the consumer. And that's the reality. You can talk about tariffs all you want. Consumers are going to pay it on iPhones. They're going to pay it on electronics. They're going to pay it across the board. And that's really what you're seeing in terms of self. I think right now, tech stocks, you look at a name like Apple, essentially baking in numbers cuts, 12, 15%. And margin erosion that could be more. So our view in terms of how we're navigating this, very similar financial crisis days, COVID 2020, is that you have to look on the other side, assuming some sort of normalized earnings into 25 and even 2026. And those are the names, whether it's Microsoft, Apple, and some others. That's how you navigate in terms of, looking at the scenarios in terms of how these play out. It's interesting because we did get exemptions on semiconductors in the midst of these tariff announcements. But another area of the market that was very defensive today and held up relatively well were defense contractors themselves. Now, I realize not necessarily the case for the Palantirs of the world, but in general, when you're talking about some of these types of companies that are exposed to government revenues, that maybe are a little more domestically focused in terms of the stacks they've built out, is that a place to be investing right now? Yeah, I mean, and I think Palantir and others, but if you look at Lockheed and some of the primary, no doubt, those are ones that held up, I think, a lot better in terms of defensive. But I think devil's in the details, because the reality is when you look at the implementations, you look what comes from foreign perspective, you're talking 40, 50%. A lot of these implementations from a hardware perspective and others. So that's why our view is like and to your point, John, is like what are the second, third derivatives? What's the ripple effect? What the demand destruction is? I think investors, if you look here, these stocks are baking in recession into these stocks. If you think it's anything better, and you're basically saying some sort of game of high-stakes poker, and there will be negotiation, then these are the names that you ultimately buy. But look, it continues to be, if these tariffs stay, we've said in tech, it's an economic Armageddon.